This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
The U.S.-led coalition imposing a price cap on seaborne Russian oil announced changes on Wednesday to its compliance regime the Treasury Department said will make it harder for Russian exporters to bypass the cap. The Treasury also imposed fresh sanctions on a ship manager owned by the Russian government and 3 oil traders involved in Russian oil trade. The Group of 7, G7, industrialized countries last year imposed a price cap of $60 per barrel on Russian oil shipments in response to Russia's invasion of Ukraine.
U.S. Gulf Coast refiners have reduced gasoline export prices to their lowest since 2021 because restrictions on shipping through the Panama Canal have left exporters unable to send as much of the motor fuel to international markets. Severe drought in Panama has left water levels too low for the transoceanic canal to function normally, forcing transit reductions through one of the world's shipping choke points and impacting supplies of a wide range of goods. The U.S. produces more gasoline than it consumes, most of which is refined along the Gulf Coast. A steady stream of exports is crucial to refinery profits.
Moving on to the top news in the energy sector.
Shipping companies remain in the dark over a new international Navy coalition being assembled by the United States to combat attacks in the Red Sea, with many vessels continuing to avoid the area or cancelling contracts, sources said on Wednesday. The sources, who include shipping and maritime security officials, say few practical details are known about the initiative launched on Tuesday by Washington or whether it will directly engage in the event of further armed attacks at sea. Iran-backed Houthi militants in Yemen have since November 19 stepped up attacks on vessels in the Red Sea to show support for Hamas as Israel's military offensive in Gaza continues.
China's surging oil production growth in recent years, the result of a concerted investment push, is expected to ease in 2024 as falling output from mature fields requires state oil companies to tap more challenging shale and ultra-deep reserves. While China is the world's biggest crude importer, it was also the world's 6th largest crude oil producer last year, according to the Statistical Review of World Energy, with heavy investment helping to reverse a significant decline between 2015 and 2018. Production for 2023 at around 4.18 million barrels per day, BPD, remains below the 2015 record of 4.3 million barrels of oil per day. But Goldman Sachs said that the upside surprise of China's output trails only the higher than expected production this year from the US, Iran and Russia. Next, we have the top news in metal markets. Dalian iron ore futures rose for a third consecutive session on Thursday, helped by tight inventories and expectations of higher Chinese demand despite an uncertain outlook. The most traded May iron ore on China's Dalian Commodity Exchange, DCE, rose 1% to 944 yuan and 50 fen, $132.18 per metric ton as of 0250 GMT. On the Singapore Exchange, the benchmark January iron ore was up 0.2% at $133.91 a metric ton, snapping a 3-day losing streak. China's state-backed DCE on Wednesday set a limit on daily trading volumes for iron ore futures at no more than 500 lots on contracts for January to May 2024 delivery.
Gold prices rose on Thursday, helped by a softer dollar and lower Treasury yields, as traders look to U.S. economic data for more clues on the Federal Reserve's monetary policy outlook. Spot gold was up 0.4% at $2,036.60 per ounce, as of 0442 GMT. U.S. gold futures rose 0.1% to $2,048.60. Benchmark U.S. 10-year bond yields held near a 5-month low touched on Wednesday, after British inflation plunged in November to its lowest rate in more than 2 years. The dollar was down 0.1% against its rivals, making gold less expensive for other currency holders.
We will now look at the top news in the agricultural sector.
China, the world's top buyer of soy and corn, will push for higher grain yields across large areas of farmland as it seeks to ensure food security for its huge population, state media reported on Wednesday, citing an annual rural policy meeting. China reported a record corn crop this year and bumper harvests of other grains, but Beijing continues to be concerned with food security, particularly amid rising tensions with trade partners, climate-related disasters and military conflicts. Record corn production of 289 million metric tons this year was achieved largely thanks to a 2.7% increase in planted acreage, as authorities reclaimed land used for other crops for staple grains. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.